morning. It is Friday, April 26, 2024. This is Option Pit Live. We're here every Friday giving you all the market insight and reaction that you need. I am Mark Sebastian, your only option, and I am joined by one, Leisha J. Leslie, the queen of the candles, the Duchess of Doge. Good morning, Leisha.
Good morning.
Well, PCE is out. So I'm surprised because the core PCE came in line month over month, up 0.3. Core PCE actually was hot. 2.8 versus 2.6 was the forecast. Previous 2.8. The PCE price index month over month in line. The price index year over year hot. And personal spending month over month, maybe that's the one they like, came in at 0.8 instead of 0.6. So, I'm looking at these numbers and they don't look that positive. And yet we got a nice 10-point pop out of S&P 500 futures off this news. What is your take, Leisha?
They like it. They're looking for any reason to rally further. Here's my ES chart. We've held the very, very important red median line of the pitchfork.
Mm-hmm.
Look at ES has held nicely. Now we do have a little resistance just above here in ES 5166. We got to watch that. But yeah, I think they're let's go higher again. This is America, right?
It's America. Stocks
Sorry
go
about
up.
the dog.
No worries.
She's outside.
So I got to tell you, I'm a little surprised at the reaction because that is not necessarily bullish. The 10-year note is up a little bit on this. So, we've seen, and I know you're going to share some charts here in a second, but the bond market has been really weak and the stock market's been able to kind of shrug it off.
Yeah.
What is the level where bonds can get to that the stock market can't ignore anymore is, I think, the question that we're approaching.
As you said, bonds have been in a sell-off since back here when they topped out on February 1st. And like you say, the market has just shrugged it off. Here's some support right just below here on the 10-year. And then down here, 105. I don't know. I think they're ignoring whatever obstacles are in their way. Yeah. And now we've had some good fresh earnings pops. Yeah. And that gives them another reason to rally.
Yeah, well, and I know we're going to talk earnings a little bit more here in a second, but we had ExxonMobil and CVX report this morning, Microsoft and Google last night. And then the previous day, Meta, IBM, Intel, really different earnings and really different earnings reactions, despite all that. But before we dig into individual earnings, the kind of other underlying story in the market has been the strength in gold and the dollar and oil. Everything, soft bonds, strong gold, strong dollar, strong oil, those all say the equity market should be getting destroyed, right? Yeah. And they're not. So what are you seeing in in the dollar and gold and commodity markets?
Interesting. Here's the 30-year does have support just below here, so TLT. Crude is very interesting. I believe crude is ready to really rally. It's trading now. It pulled back. Nice rally. Pulled back off this doji. Another doji down here. Now we're rallying. It's going to retest these recent highs. Very interesting, and I'm going to write about this weekend. There's a nice cup and handle in USO. See that?
I do.
So that could rally, which is about 20 points from the top, the rim to the base of the cup's about 20 points. You want to see it trade above though the rim before you hop in. So USO, wait for it to close above 83 and a quarter, and then hop in. It should rally $20.
Oh wow.
We looked at crude already.
Mhm.
Dollar. The dollar could be bull flagging here, or it could still be trying to trade lower. Hard to say. Hard to say. Your MACD just went rolled over negative. Hard to say where the dollar's going here. Gold had a little mini pullback. Now it's trying to recapture and trade higher, I would say.
Yeah. And like I said, I mean, gold, dollar, it's a strange market that we're in right now. This all feels like we're kind of ignoring bad things until we can't,
Yeah,
right? It's like the market is holding, the market. It's got its hands over its ears, going la 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 la, so
exactly.
it doesn't hear all the bad news.
Exactly.
That's kind of what it feels like right now.
Sure does.
Um, and uh, just I'm not sure where this all ends, but the things are not lining up in a way that seems normal to me. As we're reporting this, Google is up 11%, and Microsoft is up 4%, and Amazon, who didn't report today, is up 3%. Those are all winners. Losers, the oil names. CVX down small. ExxonMobil down about 2%. What did you think of these Google earnings? Because that was a pretty strong move out of Google. I think it caught a lot of people flat-footed.
I don't think so. This was very bullish the day before. Look at the
Oh,
volume. But look where it is. It's right at the top of the pitchfork. Exactly. 174.5 is the top of
oh
my
wow,
pitchfork. Isn't that amazing?
it
See
is.
that?
So these pitchforks are pretty phenomenal. You're basically connecting a high low high or a low high low, and
Correct.
it creates this range that and it is just super predictive of kind of the where a stock is going to trend. Is that kind of how you describe it?
Yes, I would definitely say trend gives you support and resistance levels. I think they definitely can tell you longer term, where it's going. Here, it went from the top to the base, back to the top. Now it had entered into an old pitchfork. Excuse me. I mean, I would have never guessed that Google would trade to the very top of the
Yeah.
pitchfork. I might have guessed here to the median line if I was bullish, 164, but it's 174 at the very top.
And so like you never delete your old pitchforks, you just add new ones.
Exactly. And a lot of them are Tesla traded right down to, I'm sorry, popped up to support there. That was in a pitch. Yeah, that was at the base of the pitchfork also right there.
Mm-hmm.
Scooped right back up into the old pitchfork and probably will carry further higher. What were the Microsoft? I think here's IBM traded down to the median line. Look at that right there on the median line.
Oh wow.
And I think Microsoft hit the pitchfork too. Yep, right there. 415, 414.64 is right there.
Oh wow. Just
If we knew the
absolutely.
direction, we could guess the price.
There you go. So just some really interesting earnings so far. Earnings season. Yesterday was really the first day that earnings came in a kind of a positive way, right? Leading into Microsoft and Google, basically every report had been kind of disappointing outside of a couple of names. The one name from yesterday that was bad is the also ran an AI Intel, which just looks terrible.
Yeah, Intel's in no man's land on my chart. So I think Intel, if it decides to stay down here, 2840 could be in Intel's future.
Wow. I
Yeah.
mean, talk
Right
about
here.
fumbling the ball. It is pretty spectacular. All right. Well, it is 7:45 Central, 8:45 Eastern. Let's bring on one vicar of the VIX, the Viking of volatility, Andrew T. Giovinazzi, to join us to discuss
Good
earnings
morning, Andrew.
How you
and
guys
this report.
doing?
So, Andrew, this PCE number came out. It's hot, and we rally.
I like. What did you say before? You're like, you put your hands up, like,
Well, you don't want to hear something, so you put your hands
exactly.
over your head and you go la 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 la.
We're gonna
And then
go
you
up. We're
can't hear
gonna go up.
anything.
We're gonna go up.
Yeah.
I think at this point, like, well, it wasn't as bad as it could have been. So, um, I think I wrote like this weekend, prior weekend, that earnings will definitely, the only thing that will pull the market up at this point would have to be great earnings. Something to make people get excited about AI or whatever again, right?
Mhm.
You had some, I mean, we haven't really had Intel as the first. LRCX I thought was up a little bit on earnings. We've had, and now we had they like Google, but they didn't like Facebook, mostly because of they said AI isn't really helping our advertising yet. Something, they basically didn't say anything good AI in the Meta earnings.
Mhm.
But it seems like Google sort of changed changed
Google
all
and
that.
Microsoft, yeah.
Yeah. So, those are still the two bigger monsters.
Mhm.
Google's going to pay a dividend, which, historically has never been great for a technology growth company. You remember when
Right.
Microsoft paid a dividend in the early 90s and the stock basically was stuck in the Ballmer years at $22 for like 8 years. I know it's hard to imagine, but Microsoft was like a $19 stock in 2011, 12, 13. And
Not
then
that long ago.
obviously the new CEO has changed all
I
that.
mean, Ballmer was not a very good CEO.
No, but he got rich.
He did. He was already rich, but he got even richer.
Yeah.
He
So
was and this is why I think Tim Cook needs to go. I think Tim Cook is, not Steve Ballmer, better than that. All right, but the innovation out of Apple is completely lacking.
is
There's
zero.
nothing new coming out. They're just milking what they have. It is a repeat of Microsoft and Windows from 20 years ago.
Yep, I agree.
I mean,
And I think that's why Apple's suffering. Like, so their sales might be up 2% or whatever, but they're already trading at such a high multiple.
They got caught flat-footed on AI. Apple could have just bought GM rather than sit there and work on a car with the amount of cash they have on hand.
Right.
And not that they should buy GM.
No, they don't
I
want
would
the
never
union
take
problems.
down.
Nobody
GM
wants
is
them.
worth $50 billion, but they've got $100 billion in debt.
Right.
So that you're like, why is GM only traded at 6 PE? Yeah, PE is not the whole story, folks. And then you're like, why does Tesla trade at a 30 PE?
No debt.
They've got $3 billion in debt. That's it.
Yeah.
So it is a Apple got caught so flat-footed, and Microsoft and Google are just running circles around them. Nvidia, if it wasn't for Intel, Apple would be the biggest also ran out there.
Right.
So we've got this Nvidia earnings that are not Nvidia. We've got Microsoft and Google came out. Those were great. Meta, IBM, and Intel, terrible. IBM is, another.
Were their
IBM
earnings
is Apple's
bad, or
future.
were they buying a company they were paying up for another? Remember when they bought Red Hat, for
Yes.
who knows what? They
And
basically
Sun
are just,
Microsystems.
yeah, like they just buy stupid crap. And I think that's why they got nailed again. Like, I don't know why they just didn't stick with their whole AI architecture, or the whole AI push.
Yeah.
But were the earnings that bad, or is it just they just bought this spending a bunch of money on this
I
dumb
don't. I
company?
think that the earnings were not. I think they were light on rev, which
Okay.
people don't like. Now, speaking of things people don't like, is politically, one of the lesser popular names is probably ExxonMobil, and they reported this morning with a big miss. They came in line with revenue, missed on earnings. The stock was at an all-time high, and stock is at an all-time high, and they made less money than they made last year. Someone explain that one to me.
Well, I mean, I think it's a inflation asset play.
Yeah.
Basically, it's not a, it's not a super, it's not like, from a PE point of view, not a super expensive company. And it's, whatever the value of the assets they have under the ground, they're pretty conservative on that. So I think a lot of the oil stocks are holding up just because of that.
Yeah.
They're not quite sure. This is Israel-Iran thing hasn't helped either, right? So it still makes the whole oil picture a little jiggy, So I think oil got hurt because of the green energy revolution when Biden got elected. And then everybody realizes that we are not where we need to be for green energy anywhere close. So also in the last 3 years, there has been much less exploration because of, we'll just call it politics, whatever. Too hard to do it. So that does not bode well for prices going forward. Like, oil is going to get more expensive if we didn't do any exploration the last 3 years, right? Because oil works on a longer cycle. So I think that's probably why the bid is remaining for these companies. So, I mean, we'll see how that plays out. We could still ramp up production again, but it takes time to pull oil out of the ground. It just,
it does.
Just doesn't pop out.
Well, right now CVX is basically flat. Exxon is having the worst of it, down, call it 2%. So we've basically, with all these major companies, we've got this respite from. I mean, I guess Tesla was another one that had, according to the market, good earnings, but those are the only three where things have looked really strong. But as right now, if you look pre-market, the biotechs are flat, materials are flat, industrials flat, consumer staples slightly down, utilities flat, drug stocks, healthcare flat, and consumer discretionary flat. Communications is up over 3% pre-market, and technology is up about 0.8%. So we're back to this rotation into tech leading the way. It feels like maybe part of the reason why we don't get these massive sellout, and I'd love your guys' take on this. Part of the reason why we're not getting any follow through is that people ignore like value stocks, and then as soon as this AI thing looks like it might burst, they rush into those names, sell the AI. But the net is money isn't leaving. My take is money is moving here a lot, but there's not a lot leaving, even when tech gets pounded.
I don't think that's a bad analysis at all, because there's plenty of stocks that pay 4%, 5% dividend. You get out of you've had such a huge run in tech.
Yeah.
You're not losing. And okay, so I'm going to go, buy an oil stock or, CVS and get a 5% dividend yield or whatever.
Well, I don't know
I
if
don't
I
think
go
it's,
by
I think it's a
CVS.
pretty decent theory at least.
Is it the makeup of the new entrants into the stock market, the young ones coming in?
Maybe. I think it's more the makeup of algos
That
and
too.
who's coding. And how they're, how they interpret, people in the market, most people in the market. I was giving an interview. This is going to flabbergast you, Leisha and Andrew. I was in the middle of an interview and somebody was giving a talk about CME Group to a guy that has a massive following. I mean, there were close to 2,000 people listening to this guy talk. And somebody that he was interviewing brought up on the panel with me, brought up CME Group. And this dude had never heard of CME.
Oh my
And he
gosh.
was allegedly a stock market expert.
Oh my.
I gave a slight dig.
What do
as I
they
was
do there
leaving.
again? They trade E-mini futures?
Yeah, I'm like, have you ever heard of S&P? I finally was like, I told him, I was like, I worked there for some. And I go, hey, have you ever heard of S&P futures? He goes, yeah. I go, they trade there. He went, oh,
Isn't that
you
sad
learn
though?
something new. You learn something new every day.
It makes me sad.
It
The
does make
floors
me
are
sad. He's a smart,
irrelevant.
and listen, I'm not calling this person dumb or they're just don't know about. They're
They don't care.
smart.
I mean, no one cares. It's all
he
electronic.
can pick a stock. I mean, he can pick a stock direction. He's not a dumb guy. Just wasn't informed about what it is people that a lot of the younger people don't understand market structure and how all the pieces connect. And that was kind of my take, is that younger people don't understand how all the pieces are interconnected.
Well, there's no trading floor anymore to educate. Like,
Exactly.
when we were coming up, you could start out and like make your bones and be and learn to be, and you could be a floor trader. You could get backing. You could go down there and you could make a living. And a lot of guys started huge firms just from floor trading, O'Connor, Susquehanna, like massive, those guys just started as floor traders.
Yeah.
And some of them became, obviously massive. Interactive Brokers started from an electronic floor trading firm.
Yeah.
So, but now it's all, it's kind of like a funky video game, which of course I bemoan it every day, but that's what it is.
Yeah, it kind of is. It's like, who's going to be on the cover of NYSE 2020 of EA's NYSE 2025? They're going to have a bad investing year. It's like all right. So speaking of investing, another name that reported earnings this week. You heard me mention GM and Tesla earlier. There's one I've been leaving out. It is time for our stock of the week. And this is going to be a mini preview of our ticker highlight show on Friday when we really dig in. Or on Monday, excuse me, when we really dig in. But today, we're going to move Leisha. Reuben, can you move Leisha into the big thing?
No.
Because Leisha J. Leslie is going to be our judge, jury, and executioner. As Andrew and I argue about our stock of the week. No, yeah, there we go.
Put Andrew in there.
No.
No.
Andrew and I argue about, well, it's Judge Leisha. Everybody's got a judge show now. You got Judge Judy. Vivica A. Fox is a judge now.
Is she really?
She was on. Yeah, I was walking by yesterday. She was on the Today Show wearing a judge's outfit. Meanwhile, the only thing my wife says about that is that I lack judgment. So, Andrew, we're going to talk Ford. Do you want to? You can. I'll give you the bull case if you want. Or you feel free to take the bear. I will let you have first pick.
I'll take the bearish case for Ford.
Oh, all right.
Yeah.
All right.
Mostly because I think I think their big problem with earnings is they can't make money making electric vehicles. They're just, Ford was trading what in the 30s a couple of years ago, like $32 when electric vehicles, they're going to make a fortune with the Ford F-150, whatever.
Lightning. The
Lightning.
F-150 Lightning, yeah.
Yeah, except they're losing $100,000 a vehicle or something like that, because they're spending so much money on it. So it's odd to say, but it doesn't sound like Ford with their cost structure can manufacture electric vehicles at scale and make a profit. Maybe the Chinese are doing it. Who knows how much a Chinese EV company makes, but I think from a growth point of view, I think there's a reason why the legacy automakers are trading it like a 3 PE or 5 PE, because their costs are relatively high. They've got a lot of debt. And so I don't know. I think Ford had when everybody thought EVs could be something, but now they're just basically just sucking all the money out of the company. So for Ford, I'm meh on it.
Meh.
I got to tell you, one of the things I like about Ford is that they actually have, up until this last quarter, their long-term debt has pulled back dramatically over the last few years. So they're actually, with the positive cash flow, they're not just throwing dividends out there and burning through cash and doing buybacks. They're actually
Retiring
cleaning
debt.
up their balance sheet.
Okay.
What I will tell you is the F-150 Lightning is a lot more viable than the Cybertruck. And with the investments they've made in electric in that F-150, when they eventually roll out the hybrid version that's electric and gas, because the reason why the F-150 the Lightning's having problems is that it's a truck. Right. And, people drive, they're great for the job site, but you can't risk running out of juice in the middle of a construction project.
Yeah.
And so, it's a cool vehicle. I mean, if you put a gun in my head and said, Mark, you have to buy an electric vehicle, you can buy, and it can't be a Tesla. The F-150 Lightning would probably, or the Mach-E, the Mustang Mach-E would probably be the only ones that I would buy. The Rivians are incredibly ugly. I don't like the Lucid Motor ones. The Cadillac Lyric, their electric SUV. Have you seen that thing?
No.
It looks cheap. It looks cheap. So there's that. But the company's still making money. They're working on their balance sheet. Are they going to do anything exciting this year? No. In terms of, in 5 years, what's going to have made you more money, being long Ford or being long Tesla? I'd say Ford.
Interesting. That is going out swinging right there.
All right, Leisha, Jay, Leslie,
Don't forget Tesla's
Judge, Jury, and
robots
Executioner.
too.
What do you think?
Let me show you my chart. Going back to July of 22, Ford has just been in a trading range. It hasn't gone anywhere from 11 to 13, and it pops up to 13 and change. So it doesn't have a huge range. Right now I see a bull flag here off this nice bullish day. Short-term bull flagging, I'd say Ford can go to 1378. If it decides to trade above there, 15 and a quarter. And support is generally always found here, 1066.
What does it look like on a monthly?
So not so exciting.
No. Even the monthly isn't exciting.
No, not very exciting. Could get a pop. Short term, I think it'll pop. But you may get, squeeze $1, $1.50 out of it.
Well, I have a couple of different trade ideas on Ford, but I'm not sharing them today. We're going to share them on Monday during our ticker highlight show. And if you want to join us for the ticker highlight show, you want to follow me on Twitter and add Option Pit, and we'll make sure it goes. Folks in the chat, I see that us discussing autos always gets people chatting. People are talking about the towing. It's Real Hood Pros says the EV Silverado never even made it to market, which is true. So it definitely some nice comments. What do you guys think about my idea of Ford not being worth more than Tesla, but outperforming Tesla over the next 5 years? What do you guys think? Let me know. We've already seen Alicia basically say it's not going up or down. It's just super, super boring stock. But we've got a trade idea. But you know what's not boring? And also a just fabulous ride. And it's not made by Tesla. It's not made by Cadillac. It's not made by Ford or Boyd or Lee or Mercedes. But you might say it's the Ferrari of ideas. It is Andrew's trading vehicle. Take it away, Andrew.
Well, thank you. Now I got to see what I'm doing here because I go on. I got too many tabs up. So hello everybody. So what I want to do today is I wanted to share with you one of my favorite indicators. And I can't remember if I've done this or not, but it's what happens when you get old. You can't remember stuff. So if you put up my first slide, Ruben, thank you. Okay. It's 9-day VIX. And right now, so they basically use the VIX calculation on SPX options that expire around 9 days. So why is this useful? Well, because ever since because when I was a trader, and maybe Mark, Alicia, the three of us were floor traders. We didn't have weeklies. And we had weeklies, right? Once a month when the near term became a weekly. So we had a weekly option and then we had the serial option. But now you have daily options in some of the big indexes and weekly options. So you have a lot of shorter term volatility for a signal. So 9-day VIX is basically picking up volatility, over roughly the next 10 trading days. So anytime you see 9-day VIX starting to slump, in general, that's a pretty decent bullish indicator. And right now, you can see from the chart, we had that spike in short-term volatility, right? Because everybody's worried about the Israel-Iran thing and all this geopolitical stuff. So 9-day volatility, short-term vol spikes. It's going to spike over 30-day volatility, which is VIX. Now, what that usually means is the market is under a lot of stress, and expect the market to move around, SPY to move around a lot. So right now we have had a kind of a pullback. Yesterday we had a huge pullback in volatility because the earnings were decent. But what you've noticed is we've kind of had a dive in short-term vol, then it's popping again, then it's diving again. But we're not really getting what I would call a full let-off, meaning it's not steadily declining. So we go to the next slide. So what I'm showing here is like we have the Fed is talking next week, FOMC minutes, I believe. That has generally been a huge catalyst. Now, right now, 9-day volatility is around 15, about 1%. We've been trading almost 2% intraday every day this week, meaning if you go a 24-hour period, the SPY has moved about 2%. Although close to close, it's been kind of sneaky, but intraday, you've had those pretty solid moves. So I think a strangle for next week would be a play. Like I have variations of this on, like in OP mentoring. But the way you could look at it is because you have kind of this short-term vol, the market is pricing, you could see from the screen, right? The straddle, the call and the put is about what, $8.50 for May 03. In my view, because the Fed is coming out, this is a classic time you want to buy premium because it's very hard for that short-term, right, 9-day vol to come down when we're waiting for news. So today, it could be a good day if you have a pullback in volatility. It looks like they're trying to pull VIX back, but I don't see it red on the day as of right now. So the market's still expecting pretty decent moves. So anyway, as long as 9-day VIX is over VIX, so the 9-day number is over cash VIX, I expect in general that short-term volatility is underpriced. That's my general rule. And then I go look for a trade in that. Now, if you show my screen now, Ruben, so what we have now, it's a prototype, but it's coming along. So I got a Tradier account, a TradeHawk account. We're pulling data in. And basically, this is a tool that is helping me to find the most efficient option contracts for a period of time. So I set like a hold date for 3 days. So the hold date is based on the current realized vol, or I'm sorry, the trade is based on the current realized vol. So it helps generate an efficient contract. So right now, again, with the movement that we have had recently, the 515 call and like the 502 put would be the most efficient strangle for me to trade currently based on just how we've been moving. So this will be available from Option Pit soon. We haven't quite figured out how we're going to, create all the goodies for it, but it's basically a way to see if you have an idea like, okay, I think this is going to go here. I think it's going to go there. Based on how the market is trading currently, what is going to be the most efficient contract for you to trade? Meaning, okay, what's going to give me the most bang for the buck? So if I buy this 515 call, right, based on current movement, I think it could double by next week, by the end of next week, May 3rd. Or if I buy the 502 put, right, I expect it to double, right, or, go to 590. So a little bit more than a double. So you can also see when you buy a contract based on expected move, right, we got a little, secret sauce for that stuff in here. You get an idea of how much it will pay. Yeah, very much. It is like the Edge Hunter, Michael. He's asking, is it like the Edge Hunter? So what we're doing is we're taking our concept of, using volatility to help you pick trades, and you want to find the most efficient trade. So if you have an idea, this will generate an efficient trade for you, and then you go trade manage it yourself, which is, it's what we do teaching. But anyway, this is the idea of, again, I got positions like this on right now because I think we're going to move. I think we're going to move, much more than a 16 volatility or, 1550, whatever the 9-day VIX is right now. So that's my trading vehicle. The trading vehicle will be something tied to Tradier. So if you have a Tradier account, you're going to get their lovely data for nothing, and you'll hear more about it in the future. So anyway, that's it for the Andrews trading vehicle for the day. What do you think
I love
about
that you gave a little surprise reveal
Yeah.
on a piece of technology we're working on with in cohort with the Tradier folks in conjunction with Tradier. This is just our first iteration. We're going to have something, fully ready for consumption here very soon. But folks, get excited. We're going to start providing some really cool stuff to you guys here.
Like using that volatility
Tradier.
thing.
Yeah. So let's we're running up against it. let's kind of run down what's happened since we've been talking. Futures are now down from where they were prior to PCE. On PCE, prior to PCE, futures were trading about 51.20. They actually popped to 51.40 on that news and have since kind of slowly pulled back. We're now trading 51.14, up 32. That's mostly Google and Microsoft pulling that higher. Bonds are still relatively strong. NASDAQ futures are up 0.8%. And gold is up by 2 points right now as we're talking. GLD is oil is up about call it 50. USO is up, call it 50 cents. Oil contracts up 1%. All in all, if you didn't have Microsoft and Google, I would say today's info is relatively not great. Leisha, what do you think for the rest of the day?
As I said, I believe we are holding our support. We may not have a huge run up. The news is all out. Maybe we sit up 30 or 40 and that's the end of it. That's what I'm saying. I don't think we're going to, maybe we rally up 40, up 45 and stop. I think we close up 30. I think we close right around here.
Andrew?
Market wise, this is a hard one today. I think we do rally a little bit just because
This is
that's
America.
what we're doing. And everything looked kind of abysmal yesterday, and once again we rallied. So it would not surprise me if SPY is up, again 3 or 4 points. But next week we're waiting for more news. So
yeah,
again,
I mean,
keep an eye on vol.
Between yesterday and today, S&P futures are up 10 points. Net.
Right.
I think the highs were hit at 8:30. That's my take. And I don't know if we're gonna go red today. The NASDAQ will not. But don't be surprised if we get kind of a mini version of yesterday, like the Dow's only up 15 cents. So it's up literally 15 points right now, the Dow Jones. I would not be surprised if maybe we have a bad breath day. Maybe the market's green, but most stocks are down because the news wasn't very good. And I would not be shocked if we do get a bit of a reversal. I wouldn't. And I know I've said it a couple times, but just something smells here. The PCE number was not good. And outside of Microsoft and Google in particular, earnings have been not great. So
everything
I think we're
pointing
going to be
to
lower
not
than where
good.
we are. I think we're going to be lower than where we are, and maybe significantly. That's just my take. All right, it is 9:17. Market's going to open in 13 minutes. That's all the time we have here at Option Pit Live. So, guys, thanks for having fun with us. So, for Andrew T. Giovinazzi, the Vicar of Volatility, and Alicia J. Leslie, Queen of the Candles, I am Mark Sebastian, your only option. This was Option Pit Live.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be accurate actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.